Welcome back everyone. Today was the weekly expiry on Bank Nifty, and Bank Nifty was up to some extent volatile for the first 1 hour and then it became dead sideways. Now, how many of you think as an option buyer we would have made a profit in this narrow market? That also after hitting back to back 2 stop losses. On the third entry we made a profit even in target 1. So let's rewind and start from the beginning. This is where our strategy comes into effect with our 1-4 strategy. What is this 1-2 strategy? Let's check it out from the beginning. So the market has opened a gap down opening on Bank Nifty. Today is expiry on Bank Nifty, so all eyes on Bank Nifty today. So here we'll wait for our signals to get generated on the chart, and once the signal is confirmed, then only we will enter into the trade, not before that. We are getting a signal on the put side, means we need to enter onto the sell side. So we'll wait here for the candle to close and then we'll enter. First we'll wait for the candle to close. Another thing is, many of us think that since Bank Nifty has given a gap down opening, will it be safe to take a trade on the sell side rather than taking a trade on the buy side? See, you need to follow any one particular rule, right? It is true that many people get scared when already the market has come down, and then when you are entering onto the sell side, people get a bit shaky that their stop loss might get triggered. The market can give a bounce back from here. It's absolutely true, but we cannot predict the market. That is why we need to follow the same strategy 365 days, right? Now, what do we see here? There is a signal on the sell side, but as you can see, the signal candle low did not break. So we haven't entered onto the sell side. Now, there is a black candle forming on the chart, which is called the reversal candle. Reversal candle means the indicator is detecting a reversal movement. So here what we need to do, after the reversal candle has closed, and if the reversal candle high is broken, we will enter into the buy side. Here we can clearly see the reversal candle high is breaking, so we'll enter into the buy side, keeping a stop loss on the previous candle low or on the low of the fourth candle. On the first signal or trade, we will enter into the market with only one lot. Please remember, our first trade on our first signal will be only with one lot, and we will strictly maintain the stop loss and follow the targets. When trading in options, always try to buy in the money call or put options. Never buy ATMs or OTM options. Here our stop loss is getting triggered. Here we have entered in Bank Nifty 52,000 call options. Our entry time was at 9:39 and we exited at 10:45 with one lot, and our net loss was only 60 points. Here we have made a loss of 900 rupees. So if our stop loss gets triggered, never hesitate to book your losses and wait for the next entry. It is getting very tricky. Bank Nifty, after triggering our stop loss, again we can see price is moving in a just above the reversal candle. If our stop loss gets triggered, after that again price moves in the same direction, we can again re-enter onto the trade. So now price is trading above the reversal candle high. We will again re-enter into this trade. This time our entry will be with 2 lots. Not 1 lot, not 3 lot, only with 2 lots. We will double our quantity and our stop loss will remain the same. Again, on our buy side, our stop loss got triggered back to back, 2 stop losses. With this strategy, we can enter into the market up to 4 times, not more than that. If your stop loss is getting triggered back to back, we can re-enter into the trade up to 4 times. Here we made a re-entry on the same strike price on Bank Nifty on 52,000 call option. Our entry was at 954 at 353 rupees and we exited at 10:09 a.m. at 281. So here we booked a loss of 70 points since we had traded in 2 lots. On our second trade, we lost 2,100 rupees. So we can still wait for further trades to get executed. Slowly the market is coming down and price is trading just below the sell side signal low where we got our put signal. So if market is coming down and the first sell signal low is getting breached, we will again re-enter into the market, and this time 4 lots. Gradually we will keep on increasing our quantity, but remember, we will only increase our quantity and trade on the next signal when our stop loss is getting triggered. If our targets are getting triggered, we will quit the market, and if our stop loss is getting triggered back to back, we will enter with the same strategy, doubling our quantity, maximum up to 4 trades in a day. Now our sell side trade has been activated. Our stop loss will be previous candle high. If the stop loss is very big, you can set your stop loss on the signal candle high and then wait for our targets. Here our first target got achieved. This is the reward when you are trading with patience, when you are trading with discipline and following the strategy. On the first 2 trades we made a loss, and on the third trade there is a profit. Now you might get confused that in this narrow range, did we actually make our profit being an option buyer? Because in the first 2 trades there was back-to-back losses. In the third trade, how much profit we have generated. Now I'll show you on the third trade how much profit we have made as compared to how much we have lost. This is Bank Nifty 52,500 put options chart. We entered onto the sell trade at 10:18 a.m. at the price of 290 rupees, and then from here we exited around 10:39 where we got our first target around 400 rupees. So on the third trade we have entered with 4 lots and we have booked roughly 110 points. So 110 points into 4 lot is 6,600 rupees. Previous losses combining both the trades was only rupees 3,000. So on the third trade our net profit is 3,600 rupees. That means we have recovered all our losses and we are in profit right now. From here onwards, what usually our strategy is, when our first target gets achieved, we usually book partial profit and trail the remaining quantity for next target, and then our stop loss comes to the cost price. But since what we can see, market is completely sideways, this sideways market continue, considering today is expiry, so premium, there will be a faster decay on the premiums. So it is better, since we already had back-to-back 2 losses, it is better to book entire profit at target 1 and exit from the market. Yes, if you're an option seller, options you can still consider staying at this current level because market is sideways. Definitely the longer the sideways market remain, the premiums will drop, the more profitable you will be. But in case you are a naked option buyer, I would suggest, for considering today's typical market, to exit completely. Even if we have made a small profit, it is always better than booking a loss. So this is how you need to trade with this indicator. If you have any queries, you can ask me in the comment section, and if you want to subscribe to this indicator, link is in the description of this video.